What does Patrick Bateman from American Psycho and Jordan Belfort from Wolf of Wall Street have in common? Well, both are popular figures that a lot of people think about when they hear the words investment banking, but in actuality, their worlds pretty much have nothing to do with what banking is actually like. Today, I'll be debunking the 5 most common myths about investment banking and then providing their actual realities based on my time as an investment banking analyst at JP Morgan. Jumping straight into it, myth number 1 is that investment bankers are traders or investors who invest into companies. I think this is an understandable misconception because investment banking has the word investment in it, right? Which is pretty confusing. But the reality is that investment bankers are actually people who work on transactions that fulfill 2 types of functions. The first of which is M&A, mergers and acquisitions, when a company wants to sell itself or buy another company. And second is the raising of funds either through equity offerings or debt offerings. Investment bankers help their clients run these types of transactions by offering financial advice for things like valuation, also managing the whole legal and due diligence process, and just helping the companies understand what the market situation is like, who the potential buyers could be or investors could be, or potential sellers. What's also a little bit confusing to most people is that there is something called an investment bank, which are banks like JP Morgan, Morgan Stanley, Goldman Sachs, who have multiple different divisions like sales and trading, equity research, and investment banking. And these all sound like they might be kind of similar, but they have very, very different functions and divisions. And it's only really that last investment banking division that works on the typical types of transactions when people say, I work in investment banking. If you work in sales and trading or equity research, you do work at an investment bank, but you're not an investment banker, which I think is a common misconception. The second myth I want to go over, which might be a little bit saddening for some of you to hear, is that investment banking does not involve a super luxurious or lavish lifestyle. You may have seen movies like Wolf of Wall Street where there are insane parties and people are doing drugs everywhere, but in reality, especially after 2008 with all the regulation, investment banking has a pretty professional and pretty regular atmosphere. As a more junior banker at the analyst or associate level, most of your time is spent inside your cubicle working on Excel or PowerPoints or on phone calls for meetings. And I would say the most exciting things that probably happen is when your deal dies and so your weekend is free, or you're spending all night working on an Excel and there's an error somewhere and you finally find it at 2 a.m. As you become a more senior banker at the vice president or director level, you get your own office, so no longer in a cubicle. And you also get to travel the country, usually visiting clients, eating nice meals, things like that. But I would say the best part of becoming a more senior banker is probably getting increasing compensation while having much more free time to do whatever you want and maybe have those lavish parties, but outside the office. I do have to mention though that there are 2 things that I do think are pretty lavish in the investment banking world. The first, which are closing dinners, and the second, which are roadshows. After you complete a transaction, you usually have something called a closing dinner, which is where all of the parties who are involved in the transaction, so lawyers, the investment bank, the client team, all gather together in one city in order to have a really nice, lavish dinner that can cost anywhere from $200 to $500+ per head. I think it used to be a lot more extravagant before in the 90s and 2000s, but usually now it's just a really, really nice dinner, which can be pretty exciting if you're an analyst or associate and these are your first types of closing dinners. But as you get older, I think you go to so many of these, and also you could really just buy these kinds of dinners and enjoy them with your friends and family if you really wanted to. During my time at JP Morgan, I did have one closing dinner that really stands out, which was actually a 3-day ski trip with one of our largest clients. It was a super, super big deal. I don't actually know how my managing director was able to pull this off with HR, but I would say that was a pretty special closing dinner. The second thing I mentioned was a roadshow, which happens during an initial public offering, where it's your job as an investment bank to take your client across many, many different cities, probably 10 to 20 meetings within a couple weeks. And throughout that time, you get to fly on a private jet. Now, if you're watching this video because regardless of the myths or realities, you want to become an investment banker already, then I have a great resource for you for financial modeling called Wall Street Prep. Wall Street Prep offers financial modeling courses so you can be ready not just for interviews, but your job on the desk as a banker. And what I really like is that they have you dig into financial statements and build models using real numbers, just like what I used to do at JP Morgan. They offer a lot of great courses, but the 2 I particularly recommend are the accounting course if you don't have any prior accounting knowledge, and the premium modeling package, which has been taken by over 100,000 students and goes over all the key valuation concepts I learned in banking like DCFs, comps, accretion dilution, and LBOs. Wall Street Prep has been around since 2004, so they've definitely stood the test of time, and they also train people at the top banks and institutions in the world. Even at Wharton, a lot of my classmates are using their live instructor sessions. If you want to check out Wall Street Prep, they have a free content library with over 400 Excel templates and 850 free articles. And if you use my code RareLiquid, you get 20% off of any purchase. I'll leave links to all of this down in my description below. Going back to our misconceptions, the third myth is that investment bankers will have to work 70, 80, 100-hour weeks for the rest of their lives and their lifestyles will suck forever. Now, if you watched my previous video on the day in the life of an investment banker, then you know that it is true. You do have to work hard in investment banking, but the reality is that you significantly get better at managing your time, and especially as you become a more senior banker, your lifestyle becomes pretty normal. The worst it gets is in your first year as an analyst or associate because you're learning on the job and you probably suck at your job. And so the first 3 to 6 months can be a lot to take in. You probably will be working those 80-hour weeks on average. In your second year, things get a lot better because you become much more efficient at your job. Don't have to work on the projects that are a little bit more boring. You don't have to worry about FaceTime because you've already established a reputation. You're better at managing expectations with your associates and VPs. But I will say, of course, if you're working on a live deal, anything's fair game. You still will have to work those 70, 80, 100-hour weeks, but you're just better at managing your time. Then as you rise through the ranks, the hours improve pretty significantly. The VPs in my office typically left anywhere from 6 to 7 p.m. and the directors somewhere around 4 to 5 p.m., sometimes even earlier. I will say, of course, you do have to continue monitoring your email to check for any work that's sent your way or really important client calls. You will have to jump on those. But you're spending a lot less time actually in the office and you're getting paid a whole lot more. Myth number 4 is that you have to have a math or finance degree or be super, super smart to succeed in investment banking. The reality is that Excel does most of the math for you. There's no calculus, derivative, trigonometry, or anything like that in banking. And as you grow more senior, your job actually becomes more of a sales job. The nature of the job in investment banking is attention to detail and perfection, which can be the hard part of the job because as an analyst, you may have built out a 60-page presentation, but in page number 55 on the appendix slides, where probably no client is going to actually read, you may have a footnote that has 2 spaces instead of 1, or something may be capitalized where they shouldn't be. And these kinds of errors, your managing director or associate who's been trained 3 to 10 plus years in catching these kinds of errors will find those types of mistakes, and you'll have to fix all of those, or as a really good analyst or associate, you will catch those before sending it off to be reviewed to your managing director. Now, of course, this is a bit of an exaggeration because all the details do matter. Your client who, if they do catch that small little detail error, then they might question everything else and they're paying millions and millions of dollars, right? So that's why investment banks care a lot about the details and making sure that the presentations are perfect. With all this said, I do think there are a lot of interesting parts of the job that do require a lot of critical thinking. If you're working on a really hairy, complex financial model that has hundreds of rows and lots of tabs, it can be pretty interesting. And also as a more senior banker, when you're thinking about what company another one should buy or at what valuation these companies should IPO, these are things that really transform an industry. And so all of that, thinking about industry trends, how the markets will shape out over the next 6 to 12 months, all of that can be interesting if that's your thing. As a quick little plug, I am creating my own How to Get Into Investment Banking course, and I'm giving 50% discounts for all the people who sign up early using my Google form down in the description below. I've been working really hard at it. Think it's going to be super useful to anyone interested in recruiting for banking. Feel free to sign up if you're interested. Moving on, myth number 5 is that you have to be type A or have a cutthroat personality to succeed in investment banking. The simple reality is that bankers at all levels need to be good with people. As a more junior banker, you're working 70 to 100 hours a week with all the people in your office. And so you're going to see these people more than you are your family. And so that's why we would always say when we're recruiting that it's important to find people that we can see ourselves being next to for all those hours. I would say that the common thread amongst investment banking analysts who are successful is that they're likable and that they're humble. And these are things that we would always look for when we were recruiting analysts and associates at JP Morgan. And we would never really want to hire anyone who came off as arrogant or cocky. Then, as I mentioned earlier on in the video, as you become more senior as a banker, it becomes more of a sales job where you have to win over clients. And so most of the managing directors in my group were people who were very suave and could tell really funny, good stories, really just likable people. Now, I don't want to paint an overly rosy picture. There always are bad apples. There are the associates who take credit for all your work and don't really care about analysts and make them do everything. And then there are the managing directors who maybe are rainmakers and they've been at the firm so long that they really don't care about their analysts and they may just not be good people in general because the firm doesn't care. They just bring in the deals. And so you always have people like that, but normally they have pretty bad reputations. And while I will say that those kinds of managing directors and people who are at the top will probably stay there and they probably, won't leave, the analyst associate levels, if you're not really well liked by the group, then you're probably going to be on your way out pretty soon. All right, so those were the top 5 myths, but I do have a bonus myth number 6 in my latest TikTok, which I'll leave a link to down in my description. Also wanted to let you guys know I'm selling a resume and cover letter and also guides about the industry and networking at rareliquidcareers.com that can help you break into investment banking. I also wanted to give you guys a friendly reminder about financial modeling courses at Wall Street Prep. Lastly, in the next screen, you're going to see a video that I mentioned earlier on in the video about the day in the life of an investment banker. Feel free to check that out if you're interested. With all this said, thank you all so much for watching. Hope to catch you all in the next video. Thanks so much, guys, and peace out.